Hello and welcome to Commodity Corner at Cannon Trading. I'm your host, John Thorpe, and today I thought it was important or would be important to speak a little bit about your safety of deposits in a commodity trading account. And you know that when you establish a commodity trading account, we designate a segregated funds account for your deposit that's segregated away from the operating capital of the firm. So that's your dollars are in a separate bucket, so to speak, and they're in your account, nobody else's account. Now, you may ask, and I get this question quite frequently, why we don't have insurance on the future side for deposits. We do have insurance on the stock brokerage side. It's called SIPC, and we also have insurance on the banking side called FDIC insurance. I'm going to hop back to SIPC real quick. The Securities Investor Protection Corporation provides insurance to a level. It's typically $250,000 in your account and your brokerage account, where you might trade bonds and stocks and mutual funds and ETFs. Over there, insurance is really required because the firm has the ability to rehypothecate or take your deposits and make separate investments and simply print what your intention was, your 100 shares of ExxonMobil, your 100 shares of Tesla. And even though the money may not be associated with your account, they can take that deposit and rehypothecate it, reinvest it in something entirely different. That's why it's important to have an insurance policy associated with your stock brokerage account. They don't segregate your funds like we do in futures. Same with a bank, and that's why, under the recent, I think, banking concerns that we've had, a lot of depositors, and maybe you, have gone to the bank and reduced your holdings at that bank and made withdrawals. That's, if everybody does that at the same time, that's a run on the bank, and that's how banks become insolvent. They become insolvent because they've got more investments out there than deposits that they do have. They rehypothecate, and sometimes they can rehypothecate your deposits on margin, for instance. Hopefully, in our first world country, we don't run into issues like that. But it's a fact, and that's why it's required. Again, that's the FDIC, Federal Depository Insurance Corporation, and your deposits are insured up to $250,000 there. On the future side, your funds are segregated. That's it for today. I hope you picked up a few quick pointers about the security of your deposits here and a few account. And we'll catch up with you.